QuickBooks Online 2025, account and settings, focusing on the specific settings under accounts and settings of usage, QuickBooks checking, and the sales tabs. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 practice file we set up in a prior presentation. This time looking more at the settings, which is part of that foundational item, laying down the infrastructure on which we can start to build towards constructing that beautiful end result structure, the financial statements, the balance sheet, income statement, of course, and related reports. So note, when we start to build the financial statements, we do that typically in the new button with the forms that construct the financial statements. But before we start building, we want to make sure that we've got the foundation, the infrastructure soundly constructed. So let's go over here. We're usually going to be in the cog for these items. Within the cog, we have this information broken out into your company, lists, tools, profile. Now you also have this information here under this button. So if you go under this button, you can sign out or you can manage your Intuit account. So just from like a hierarchical structure, what is happening? Intuit is the owner of QuickBooks. When you're logging into a QuickBooks Online system, you're logging in online. You can then imagine yourself under the tree of the branch of QuickBooks Intuit account. And then within the Intuit account, we're logged into your QuickBooks Online account. And then within the QuickBooks Online, we're logged into a particular company file, which in our case is the Get Great Guitars. And then within that company file, we might want to manage the settings within that company file. So if you have a problem with your overarching account with Intuit, this might be the place to go. Within the cog, we also have this side over here, which is the subscriptions and billing, feedback, privacy, and switch companies. So once we are logged into a particular company file, it's possible that we have multiple company files, in which case we can toggle between them by the switching here. We can get feedback, we have the privacy information, and then the subscription and billing. So this is where once we have logged into a particular company file, you will recall that we picked a particular tier in terms of QuickBooks Online, and we might want to level up or level down on it. Typically the idea being that you want to pick the lowest tier that suits all of your needs with then the capacity to level up, because that's possible to do. Leveling back down will be more difficult if you're using some of the things that are in the higher tier. So if I go in here, for example, you can see we're subscribed, and so we have the options of downgrade your plan or upgrade your plan. So we can, once we're in QuickBooks Online, we can imagine that they have different tier levels, which basically give us access to different functionality within the same overarching system, as opposed to having a desktop version versus the online version, which is basically equivalent to having completely separate softwares. Once we're in the QuickBooks Online, however, we don't usually want to go all in and start with a higher tier, even though you might get a price break when you start, right? You could get the free 30-day trial and say, hey, I'll just get the highest tiered one, and then if I want to level back or move back, I can do so. That might be a problem, however, if you're utilizing some of the information on the higher tier. You don't really need it, but you were using it, right? And then you try to level back down, it's going to be an issue. So it's easier then to go at the lower level and then upgrade as you need more upgrades. Usually the need for more upgrades happening, for example, if you need more users, you're growing, you want more users in the system. If you're down below the need for inventory, you might need to level up if you need to then deal with inventory using a perpetual inventory system, for example. So those are some reasons when the level up might take place. All right, let's go back into the cog up top. We're gonna be focusing now on the account and settings. All right, now the top tab here, the company tab, is gonna have your general information, your contact information. So if you need to update that, you can go there. That's gonna be your address, company address, the emails, and so on and so forth. So now let's go to the usage tab. So usage limits. So again, this is one of the areas which is a distinguishing factor that might cause people to upgrade. It's also, I believe, one of the major factors that's different between, say, QuickBooks Online and one of its major competitors, which is Xero. Xero's another one of the, if you were to pick a competitor as parallel as possible to QuickBooks, it'd possibly be Xero at this time. And one of the things is they have some differences in their billing, possibly with regards to the users. So you can see here under the structure that we have, which was the most common or most used form of QuickBooks Online, we've got one of 5 users. So we have a limit of 5 users. Now note, it's important to note that 5 users does not include the accountant, because you can also share with your accountant. So the way you can kind of envision this is if we're the bookkeeper, we might have 5 people that are working within the system. So we have up to 5 users that can log into the system, which is great because it's an online tool. That's one of the benefits of being online, and they could do that possibly not from one location, but from multiple locations, which is great, but you got to be careful for security, making sure the passwords don't get out there to other people that need to be logging in. And we have our accountant at the end of the year. We're going to be giving them the financial statements at least at the end of the year for tax preparation if you're in the United States, and also possibly for external reporting purposes, the creation and finalizing of the financial statements, balance sheet, and income statement. So you could typically add the accountant as well. Okay, so another limiting factor here is the chart of accounts. So you've got 0 to 250 chart of accounts. The chart of accounts are the things that we build on top of that construct the major financial statements, the balance sheet, and the income statement. So for most businesses, 250 accounts is more than enough. So most businesses aren't going to run into problems with that. But sometimes certain types of businesses might want more accounts for whatever reason. For example, if you're tracking different accounts by different divisions within the company, you might want more accounts, although typically when you do that, you might use a class tracking component, breaking out the income statement into column. Although you could use both as a double check. You can do class tracking and multiple accounts. And if you're the type of accountant that really likes to add a lot of sub accounts and a whole lot of detail, maybe it's more possible you go to that higher threshold limit. So that's just something to be aware of, but I don't think it's as common to need to level up based on the chart of accounts as compared to the number of users. And then you have the tab groups. Now, tags are going to be something that helps us to basically sort the reports, and you can usually think about them as like income statement reports. So if you look at the income statement, you might want to break out the income statement, say, by column, based on location, for example, or based on on projects or something like that, which means that you would usually use something called class tracking or location tracking, but you also might track it by sales reps and all this kind of stuff as well, which is usually when these tags might be used. So we have a whole nother course or section on the idea of tags and class tracking and location tracking and the different use options you might have for that. But again, that would mean that you're using some kind of advanced tracking with the help of and use of the tags, and then you would need more tags in a particular scenario, which would be fairly specific to a specific type of business that might need that. So let's go into our users here. All right, so here's where we can manage the users. So your plan includes up to 5 users, upgrade to QuickBooks Advanced to have more users. So we'd have to upgrade if we want more than 5, noting that if you're a small company, then you might be the only bookkeeper, or you might have a few people that are logged into it, and you might have access to everything with those people. As the company gets larger, obviously you're going to have more people that are specializing possibly in different areas, and it's going to be more important to have internal controls. That's just the way it is. Like it doesn't matter how good are the people that you hire. Once you start to get bigger, there's just going to be less of a feeling of the company people become less honest if the internal controls aren't tight, basically, is going to be the idea. So that means that you have to possibly limit the access to different people on what they can access within the system, which you have some capacity to do within QuickBooks Online, but that's another area where the advanced version has more options in terms of what kind of access you're going to give to particular people. So you're going to have one person that, of course, will be the admin. The admin might be you if you're the only person within the file, of course. And then as we add other people, we can limit the access. Now, remember that you also have the accountant firm over here. So that's going to be someone that we can invite, say, our accountant, which is great because then we can allow them to access the file at the end of the year. And in the old days, what happened is the accountant might not have access to QuickBooks. So we would have to, or whatever our accounting system was. So we'd have to give them the financial statements to at least do the taxes and or the financial reporting. And if they need anything, they'd have to contact us all the time and we give them more reports. Or we were able to basically make a backup, an accountant backup possibly, of QuickBooks Desktop. But that was kind of messy of a scenario as well because sometimes it didn't work cleanly. Right? But now you can get them online and just give them access to the QuickBooks Online, which is great for ease of use so they can log into the software. So they're not really counting as a bookkeeper, they're counting as your accountant at the end of the year that's going to do at least the taxes that we can invite by just simply emailing them as our accountant. And then we still have the 5 users basically over here. So let's add a user and just take a look at the process. Add user, enter personal information for the users. We'll send them an active to join your company. So usually we would send, I'm going to be adding Jane Clark, noting that we're going to need the email address because that's usually how we're going to send the invitation and how they would accept the invitation. Then we need to assign a role. So choose from existing roles or create your own. I won't go into the roles in a lot of detail because you can look at them in more detail here, view role descriptions. But let's just take a look at them and get an idea of why you might choose different roles from basically an accounting perspective in terms of internal controls. And also note that this is one of the reasons that you might level up to more advanced or more expensive subscriptions of QuickBooks because you might not only need more people accessing QuickBooks, but also more ability to differentiate the roles for a better internal control system. So we have the standard all access role, a standard no access. We've got the accounts receivable manager. Now, if you were to work within a large company in their accounting system, likely you wouldn't have access to all of the bookkeeping. You would have access to a particular area, and that's your area of specialization, one of those being in receivables, for example, trying to collect on the accounts receivable. So you might be limited to just that information as part of internal control. Similarly with accounts payable, remembering that accounts payable is usually something we might not have for smaller businesses, but becomes more important for larger businesses because small businesses will often pay their expenses as they come due, possibly with electronic transfers, so they can automate it with the bank feeds. But as you become larger and have more transactions, it becomes important to try to pay them as late as possible due to the time value of money and the dollar amounts of the transactions. Therefore, it becomes more important to have an accounts payable manager in order to track and try to pay the bills as late as possible. So we might limit the role of accounts payable manager to specialize in that particular task. So standard, limited customer and vendors. We've got the in-house accountant, the company admin, which of course is the main role that you would give to usually just one person. You don't typically want to be adding other people as the admin. You usually want one main admin and then add the other ones with some other item. Track time only, so you might specialize in just the time tracking. Time tracking could be necessary for payroll, but also could be necessary as your billing process if you have a job cost system such as a construction company or possibly an accounting firm, a CPA firm, or a law firm, in which case you have to track the time so that you can bill out the time. And then we have view company reports. So this could be useful because you might have external investors, for example, and you're trying to get them to invest in the company or trying to get a loan from the bank or something like that. Instead of printing out the reports and giving them to them, you might just add them as somebody that can access the reports and generate whatever they want in the system, although not change the data input within the system. All right, so then let's say that we're going to go with, to start off with, let's say we have a standard all access, and then we have the more detailed information down below. So if I view all of these, users added to this role get full access without admin privilege plus access to payroll. Okay, so then we've got down here all the items. So they've grouped them in essence, cycle, the things that they're going to have access to. So we have the sales. So we have full access on the sales side. Do I have a drop down? Yeah. So it says here, invoice estimates, sales reports, receive payments, credit memo, refund receipts, delayed credits, delayed charge, sales orders. If I select the drop down, you can see that we have the invoices. They can view, create, edit, and delete invoices. The estimates, similarly, these are all the forms in the sales area, the sales receipts, sales at a cash register, receive payments when we get paid on an invoice, credit memos, if there was a return or something, refund, delayed credit, delayed charge, and sales order. Those are all the forms. On the expense side, money out, paying for goods and services used to generate revenue. You've got the bill payment, vendor credit, credit card, expense, checks, and so on. And if I hit the drop down, you would have all the forms you would expect on the vendor side. So they can enter bills, which increases accounts payable, although they can't approve of them if there is an approval process that you set in, which would be a larger internal control. Bill payment. So this is when we pay the bill after entering the bill, lowering accounts receivable. And then we've got the vendor credit, other vendor forms, credit expense form, the standard expense form that decreases the checking account, the checks, and then print checks, and then full access purchase orders, and so on. And then on the inventory side of things, if we're tracking inventory within the system on a perpetual basis, view, create, edit, and delete inventory. On the lists side of things, let's list our employee vendors. So you can add vendors, customers, currency. So we have employees. You can view, create, edit, and delete employees, vendors, the people we pay, customers, and currencies if you're dealing with multiple currencies, which is a specialty area in and of itself. On the bookkeeping side, we've got the bank deposit, which is another type of form, kind of in the customer area, but you sometimes want to differentiate the deposit form from the other customer for internal controls. Transfer forms, transferring from like a savings account to a checking account. Bank transactions, and then rules for bank feeds. Tags, which are the things that we can tag on to give us more searching information, and receipts. And then we've got the accounting, full access, chart of accounts, registers, reconciliation, journal entries. So they have access to the chart of accounts. They can add, delete, or make active and inactive accounts. Registers, they have full access to the registers, which are in the chart of accounts. Reconciliation, like bank reconciliations, they can do the bank reconciliations, tying out our books to the bank. Journal entries, so these are another type of form, the general journal entry form, last resort form if you can't use another one. Payroll, if you have payroll on, full access. So that would mean that they would have access to view payroll. Now, of course, this is something you want to be careful of because payroll is going to have sensitive personal information with social security numbers and all that kind of stuff. Reports, full access, as you would expect, to all the types of reports, sales reports, expense reports, payroll management reports, and then time tracking, full access to the time tracking, add additional permissions. So we have any additional items that we can add down here, company information, access subscription, and manage users. So if we want to allow them to manage users and so on. So that's interesting. Let's do a quick look at the rest of them. So that's standard no access. So standard no users added to this role have some permissions and can submit their own timesheet but can't use accounting features. So this is just, they can submit their timesheet for time tracking. Okay, so account management, no, so they have account management, company information, and then they don't have access to the sales, the expense, the inventory, the lists, and so on, and the reports. All right, and I can't really add anything to that one. So let's do the next one. So accounts receivable manager. Users added to this role can see and do everything with sales, customers, and AR reports. So on the sales side, what you would expect, as we saw in the sales, they have the inventory, they have the lists, bookkeeping, they have reports, time tracking, and we could add additional, which would once again be the access and so on, but they don't have access to the expense side, the vendor side of things. On the expenses, the accounting and payroll. That's what you would expect. That makes sense. And then on the accounts payable manager would be the opposite. Accounts payable users added to this role can see and do everything with expense, vendors, AP reports. So they have access to the expense, inventory, lists, bookkeeping, reports, and they don't have access to the sales side of things, sales, accounting, payroll. That would make sense. All right, and then we've got the standard, limited customer, and vendor. So now you have the sales full access, expenses full access, inventory full access, reports full access, time. They don't have access to the bookkeeping. So this time we're going to keep the bank deposits to ourselves. So we're going to give them access to everything, but we want control over the checking account. That makes sense. That's often a good internal control if you're a small sole proprietor. Transfer, bank transactions, rules when you're managing the bank feeds and receipts. And then the chart of accounts, they can't mess with the chart of accounts. The register, you're going to be doing the bank reconciliation. This is pretty good if you're hiring. You would think if you're hiring a bookkeeper, you're like, well, the bookkeeper is going to do everything. But if you give them complete control, then then you want some internal controls. So what kind of internal controls would be good? Well, they can do everything, but they can't really mess with the actual checking account. You're going to use the cash as an internal control. You're the one that does the deposits. You're the one that transfers the money from one account to the other. And you're the one that deals with the bank transactions, which is a big part of the bookkeeping depending on the type of business. Right, so that's a lot that you have to kind of take on, but that would be a great internal control. You do your rules, tags for bank feeds and receipts, and then you don't give them access to the chart of accounts registers, and you do the bank reconciliations as well, because that's when you find the problems. That's a huge internal control to do the bank reconciliations. So a lot of people won't like that as much because you're hiring a bookkeeper in order to do the bank transactions. So, right, because you're doing a lot of the bookkeeping with the bank transactions, but that's the trade-off, right? How much control are you giving to the bookkeeper, and how much are you keeping, and so on. But we've got the in-house accountant. Take a look at that. Full access to sales, full access to expense, full access to lists, bookkeeping, accounting, reports. What don't they have access to? Payroll. That makes sense oftentimes, again, because payroll is often the most sensitive area. So maybe you want to give them full access, but then you manage the payroll or have someone else access the payroll so that you limit your exposure to liability there. In-house accountant, company admin has access to everything, you would think. Time tracking only. View company reports. Obviously here they can just view the reports, no access to all of the data input. So that's great. All right. Then, of course, we can send the invitation. So let's go back to the tab up top and this time look at account and settings again. And let's take a quick look at this sales tab. So we'll go through some of the rest of these, starting with the sales tab here. So the way it's laid out, once we're in here, we can then go into the editing side. So in the sales tab, if I go into it here, we've got the preferred invoice terms. So when we open an invoice, we have the terms on the invoice, when the invoice will be due, 30 days is kind of standard. That means whenever I enter the invoice, it's going to enter a due date, which will be 30 days later. That's important because when I track the invoice, then I have to track it in terms of when it's due, typically, to try to collect on it and then send further reminders about the invoice. Preferred delivery method sets default delivery method. So we could have a preferred print later or send later on the delivery method. How are we going to give the invoice? Oftentimes these days we give them as we create them, because we can give them electronically with an invoice. Shipping, if we're dealing with shipping, add shipping fields so that we can track the shipping to sales forms. So if we're dealing with shipping, then of course we might need a field within the invoice to track the shipping information. If we don't have shipping, we don't need that field, and we can basically possibly eliminate it. So custom fields, go to settings, list custom fields. So we might also want custom fields in our invoice for particular types of industries to help us track certain things within them. And that's going to be like a specialty area a bit in and of itself. We have the service date, adds a service date field if you need to track the date of service was performed separately from the invoice date. Now, from an accounting standpoint, when we enter an invoice, the invoice is an accrual form, meaning there's a timing difference when we use an invoice typically between when we did the work, which happened in the past, and when we enter the invoice. So that means that QuickBooks only knows to add the sales when we enter the invoice. But sometimes that's still not exactly correct with regards to the accounting system, because, for example, in a job cost system, like in a CPA firm, law firm, or possibly a construction company, for example, we might have to have all of our staff work. Then we have to, a month later, the month after, collect all that information to then invoice the client. That means I didn't enter the invoice until the month after the work was done. You see, but the system still only knows to enter sales when the invoice was entered. And it should be that the work was done prior to that. So possibly we can have a better cutoff of our accrual system by adding a field telling the system, hey, look, this is when the work was done last month. This is when I entered the invoice this month. And possibly it'll be able to then help us be more specifically on an accrual basis that's correct. Discount field adds a discount field to invoices and other sales forms. So we possibly could add a discount to the sales form. And so, for example, if you often have sales where you say, I'm going to give you 15% off or so on and so forth, and you need a field to easily enter the discount, then of course you can add a discount field. Deposit adds a deposit field to invoices so you can subtract a customer deposit from the total to calculate the balance. So you can toggle this on if you had a situation where you often have prepayments. So, and then you need to add the deposit into the invoice, for example, or when you make the sale, they give you some money at that point in time, then you're going to need a deposit so that you can show how much has already basically been paid. So accept tips. So accept tips from customers on sales receipts and invoices. This is a field setting that will apply to all future invoices. So you can add tips. So if you're collecting or dealing with tips, you have to figure out some way that you're going to be tracking that tip information. And then we have the invoice payments. So you have saved, I'm not going to save any changes. I'm going to keep the defaults. So accept online payments. So payment options, set a payment instructions for all new. So this is going to be take payment via cards. So when we send out the invoice, one of the things that we can do is say how we want to make them allowed to pay us as easy as possible. Now, I think we have a whole nother course or section on your different options for doing this, but there's going to be a cost-benefit analysis on how easy you want them to pay you, right? It would be great if they could just click on the invoice, and then they can pay you electronically with whatever system they are most comfortable with. But those systems are going to have different prices that are tagged to them. So you could send them the invoice and say, send me a check, or you could give them a link to possibly an electronic transfer type of system that can add the payment, or possibly access the Apple Pay or the PayPal Pay or the Venmo Pay. Now, if you have an electronic, most of the time you can set up electronic payments possibly with your bank, but that might not be as seamlessly integrated within the QuickBooks system. So within QuickBooks, you could also have, in essence, or set up a QuickBooks checking account, which means you have a checking account kind of with QuickBooks, which might make it a little bit easier in some cases to have a payment through that account, and QuickBooks can more easily possibly record things. So these are things you want to think about in terms of what are the options within the invoice that we think about usually invoicing to somebody that they can pay us. What are going to be the ease of payment? What's the likelihood that they will pay us sooner rather than later? And then what's the cost of each of these different payment options that we can add within the system? And then, of course, how easy is it for us to do the accounting, and how can we add the bank feeds within to that system? So I think we have another course or section on that. So we're going to say, okay, let's go down here. No, we have products and services. Show product service column on sales form. So as a product service column on the sales form, so you can choose from a list of products and services. So that's going to be typically the idea of a sales form, like an invoice or a sales receipt. We want to have the products and services typically there because you want to set up the products and services before you enter the invoices and the sales receipts, making it easy to enter the invoices. Now, if you have an SKU number, you can add that, which is going to give you a number for the invoice. Turn on price rules. So this is currently in the beta mode. If you set up the price rules, so you can dive into that in more details. Track quantity and products. So adds quantity and rate fields to sales forms so you can track this information. So that's typically going to be on by default. We'll keep it on by default, meaning if you sell a particular service or item, it's going to ask you for how many units of that item you sold and the price. If you're tracking inventory on a perpetual inventory system, you need that information to track the inventory not only by dollar amount, but by unit. But even if you're not doing inventory and you're just doing like service items, you still might track it by the number of service items that you provided. So it's routine typically to have the product that you're selling, the number of them that you sell, and the price per unit. So it will then calculate the total cost, and then the sales tax, if any, which is a type of consumption tax on that. Track inventory quantity on hand. So now inventory is going to be another component that we have to think about how we're going to deal with inventory. Remember that you might not have inventory, in which case you don't have to track inventory. You can turn it off, or it might not be that relevant to you because you're never going to set up an inventory item. So you might not need to toggle it off because you're just simply not going to use it because you're never going to set up an inventory item. If you are tracking inventory, the question is, do you track the units of inventory on a perpetual inventory system within the QuickBooks system, or are you tracking the inventory outside of QuickBooks, possibly on an external website like a Shopify store, for example, or an Amazon store, in which case we have a separate course or section talking about those special areas, or on a separate Excel worksheet, and then making periodic adjustments into the QuickBooks system using a cost of goods sold calculation. We'll talk more about that as we go. If you're tracking the units within inventory, which we're going to test and show how to do and talk more about this process, how you deal with inventory in our practice problem, but we're going to keep this on by default. Track inventory for sales channels. We're going to keep the default off for that. So I'm going to cancel because we didn't change anything. Late fees. So default charge applies to overdue. So on the invoices, what if they don't pay us on the invoice if it's past due? Well, usually you just keep on trying to collect on it and whatnot, but you could try to charge late fees on the invoices. So if you charge late fees, then you have the options in terms of you were supposed to pay us in 30 days. You didn't pay us in 30 days. So now I'm going to charge you some fees, which you can calculate then with a flat fee or a % of remaining balance and so on and so forth, and try to collect and penalize for late payments. So that's going to be that option. I'm going to keep it off by default and hopefully try to limit the amount of fees we don't get paid, not by having the late fee. Notice that the late fee thing is only really going to work if you're dealing with customers that have a repeat kind of business with you, right? Because then if they're just not going to pay you, then they're not going to pay you, right? It's only if they need to keep on paying you, if they're the utility company and they want to have their utilities stay on, then the threat of a late payment and having to pay more in order to keep that becomes something that could be doable. But what we want to do, of course, is try to pick up customers that are going to be good customers to deal with if we have that type of bit. So anyways, progress invoicing. Create multiple partial invoices from a single estimate. So I won't turn it on right now, but that's going to be for a particular type of business, typically like a job cost system, where possibly you have a construction company that has a long project, in which case you might create an estimate, and the estimate is going to be for a job that lasts more than a year maybe, in which case you might want to use progress invoicing to get paid as the job is happening, as opposed to normally under a normal revenue recognition principle, you get paid when the work is done, whether that happens at the same point in time, such as at a restaurant, or after the work is done, such as like if you're doing taxes and you complete the tax return and then invoice them. All right, so then messages, default email message sent with sales form. So if you send a sales form like an invoice, estimate, credit memo, sales receipt, you're going to send that by invoice or by email typically. And then within the email, you might have a default message. So you can then customize your default message for those forms that get sent out. So we approve your business. Please find your invoice details and so on and so forth. You can adjust that. Email me a copy. You can turn on the copy of the email if you want to receive a copy, which might be good if you don't send a lot out just to confirm that they went out. But if you send a lot out, you don't want to do that. It's going to clog up your email box. And then you can add a CC if you wanted to, or a blind copy, a BCC, the sales form for the estimate, and the invoices here as well. So you can create a different default message for estimates and all other forms and so on, so that you can have another message here. So reminders, default email message for invoices, automatic invoice reminders. So this could be useful if you have to track accounts receivable. So you do the work first, like a tax business or law firm, and then you have to track the receivables. So automatic email reminders only apply to new invoices. So there it is. So then you can set your reminder settings, right? Reminder 3 days to send a reminder, and so on. So this can really help to automate your process to try to hopefully increase the collection of invoices, right? I'm going to turn it off for now though. And then we've got the online delivery, email options for all sales forms. So show short summary email, show full detailed email, and then here's the PDF attachment. So how are we going to show it? By PDF attachment, show full detail in the email, which is the default. We'll keep that for here. Additional email options, online invoice. You could have it HTML or plain text. That could have a difference in terms of how it's going to show up in the email, even before it gets hit with the spam blocker. Like the HTML looks better, but it'll be hit with the spam blocker, whereas the text will look worse typically, but won't get hit by the spam blocker as often. So let's go to the statements. So statements list each transaction. So a statement are going to be the things that we might set out again to try to collect on the accounts receivable. So if I send out invoices, then I want to possibly give reminders of the invoices to try to collect on them. And then periodically I might send statements which could not only like give them the invoice again, but if they have multiple invoices outstanding, then it'll summarize multiple invoices. So I might then set up the statements to be sent out possibly to those invoices that are past due. So a system that we might have is like, I'm going to send out the invoice, then I'm going to send out reminders automatically so that it'll automatically send reminders for invoices that haven't been paid, for example. And then for the overdue invoices, the ones that haven't been paid within the 30-day terms, I might send out statements on all of those basically on a periodic basis, which will summarize all outstanding invoices. So list each transaction in a single line, list each transaction including all details, all detail lines. So you might have some invoices, like if you're in a construction business, you might have a huge invoice. So if you send out statements with all of that detail, it might be overwhelming. You might just be saying, hey, look, you owe me this amount, so we'll keep it at a single line as the default. But if you want all the detail to show them exactly what is going on, then you might want the more detailed line. So that's going to be the general settings. So we're keeping basically all of the general settings for the sales items as is, making sure that we have that invoice in particular item turned on because we will be dealing with invoices, inventory. We will be dealing with inventory in our practice problem.